Buying a home is a complicated and can be a super terrifying experience, which has led me to create this video. I've found that the main reason people have a terrible time buying a home is because they don't have a plan. And without a plan, buying a home is going to be super complicated, overwhelming, and stressful. So my intention is to help people navigate this process so that it's an enjoyable and educational experience, an experience where they can feel confident and comfortable making big and important decisions. In this video, I'll share with you how I prepare my clients to successfully buy a home. All right, guys, let's dive into this. Why are you buying? Before you speak with a mortgage broker or a lender, I want you to know why you're buying a home. What is buying a home going to do for you? Because let me tell you, buying a home in this market will test the reason why you're buying a home in the first place. And if your why isn't bigger than the obstacles that we'll encounter during the home buying process, it'll be very difficult for you to make it to the very end. Only the most serious buyers make it through escrow. When we encounter obstacles, you'll need to lean into your why often to help you push through to the end of escrow. When do you buy? A common question I receive is, when should a person buy? How do you time the market? Well, timing the market's very difficult. The truth is, no one knows for certain when the market's gonna go up or down. So instead of trying to time the market, know how to buy real estate right. When the market is down, you have to buy it right. When the market is up, you have to buy it right. In other words, having a solid game plan that you can execute is a much better approach. Buy when you're financially and emotionally prepared. You'll encounter friends, family, news articles saying it's a great time to buy a home right now because rates are historically low, but only you understand your finances. Move at your own pace and buy when you're ready, because guess what? It'll be you that's gonna be paying your mortgage every month. Real estate is a long-term game. Buying and holding is my approach to real estate. You know, a common and very valid fear from many people is, if I buy today and the market crashes tomorrow, I'm screwed. Not necessarily, because if you buy today and the market crashes tomorrow, you can just hang on to your home and ride the wave until the market recovers. What's important is you've secured your cost of living. You've locked in a monthly payment regardless of what the market does. Rent, on the other hand, has and will always trend upwards due to inflation. So if you can lock in your cost of living at a low mortgage interest rate and a comfortable monthly payment, would it be ridiculous to consider that as an option? What type of home do you want to buy? What are your deal breakers? Regardless of what type of home you're buying, whether it's single family, condominium, duplex, triplex, fourplex, understand that there is no perfect home. So it's super critical to get crystal clear on your deal breakers. What do you absolutely need in a home that you cannot live without? I'm talking about location, school districts, proximity to work, number of bedrooms and bathrooms. Having a clear understanding of what you need in your home is going to help you save time, money, and frustration. Get pre-approved. A common first-time buyer mistake I see often is buyers go out, they see homes without being pre-approved. And what happens is they waste time and money looking at homes that aren't realistically in their budget because they aren't aware of, where their DTI is, what their credit score is, how much savings do they need reserved, and what their monthly payments are. I mean, that's just to name a few. A proper pre-approval will allow you to shop more confidently because you'll know objectively what the numbers look like before you start looking at homes. For a proper pre-approval, here's what you'll need. You'll need W-2s, 1040s, bank statements, pay stubs, and retirement account if you'll be using any. By getting pre-approved, you'll have a plan on paper moving forward, and you'll have a huge advantage over other buyers. Know your down payment options. Although there are a lot of loan programs out there, there are 3 super popular loans the majority of my clients use: conventional, FHA, and VA. So let's start off with the conventional loan. The minimum down for a conventional loan is between 3 and 5%. Typically, people who use this have stronger income, stronger credit, higher down payment in comparison to FHA loans. A drawback for using conventional loan is that PMI is required if you're placing less than 20% down. FHA loans, the minimum down for an FHA loan is 3.5%. The people who choose this program usually have lower income, lower credit, and lower down payment compared to that of conventional loans. Now, the drawbacks of using an FHA loan are, typically higher rates, mortgage insurance, and there are city-county loan limits. What about VA loans? VA loans are available to our active service members, veterans, and their spouses. The minimum down payment for a VA loan is 0%. A requirement, however, is that the borrower must occupy the home as a primary residence, meaning they have to live in the home. Some drawbacks to a VA loan include an upfront VA funding fee of between 1.25% to 3.3% of the loan amount, but this can be either rolled into the loan or paid for by the seller. In addition, unlike FHA, the VA only guarantees a portion of the loan amount. This means the borrower might be subject to additional requirements from the lender that they choose to work with. All three loan programs discussed have their share of benefits and drawbacks. And, in order to determine which one best suits your desires and goals, my recommendation is to speak with a mortgage broker that you trust. They'll help you determine if you meet the necessary requirements and help guide you in the right direction. I'll also be creating a more in-depth video discussing the three programs that you can better compare your options. How much are closing costs? Closing costs are commonly brushed off by many first-time buyers. But if you're buying a home, it's important that you're aware that in addition to your down payment, there are also closing costs associated with the home purchase. Closing costs are expenses associated with the purchase of a home. Typically, it can be between 2 and 3% of the home purchase price. You might be wondering, what's included in these closing costs? Well, here are some items that are included in that 2 to 3%. You have service charges, you have transfer taxes, you have origination fees, escrow fees, etc. In addition, you'll most likely be doing a home inspection to ensure you're aware of any defects in the home. And you're also going to have to do a home appraisal to ensure the home has value. Now, the costs for these two inspections vary based on area and the size of the home, but just budget around $500 to $750 per inspection. Know your monthly payments. Before you start shopping for a home, know what you can comfortably pay every month. I tell my clients buying a home should be a blessing, not a curse. And here's a tip I have for you. Live like you already have a mortgage. After you find out how much your monthly mortgage payments are, practice living like you're already paying it. For example, if your current rent is $2,400 per month and your potential monthly mortgage payments are $3,400 per month, use that $1,000 difference to either pay down your high interest yielding debt, building a 3 to 6 month emergency savings fund, or saving for that down payment or closing costs. Then ask yourself if this is something you can comfortably do every month. Because if this causes a strain to your life, you may need to rethink home ownership or rework the budget so you buy a home with a more comfortable mortgage payment. Guys, again, home ownership should be a blessing, not a headache. Know your credit score. Your credit score will play a huge factor as to what loan programs will be available to you. If you think about it in the eyes of a lender, a person with low credit score is considered high risk. Conversely, if a person has higher credit, they're considered lower risk. People with higher credit scores have proven they're capable and responsible enough to pay back money that they owe, and thus are less likely to default on the mortgage loan. And lenders want to work with and offer the very best programs to the clients who are lower risk. Here are different tiers of scores. The minimum score is 580. However, if this is where your score is, I'll probably recommend you wait a bit to build up your score while strengthening the other areas of your application. At 640, this is considered good. You can qualify for some awesome conventional loan programs at 640. Between 720, 760 is ideal. You want to be in this range. People with a 720 to 760's credit score have access to the best rates and programs. Over 760, a common misconception is they'll have access to better programs after 760, but the programs are similar to the 720 to 760 range. It's not a bad thing, though, to have a credit score above 760. Assemble your team. Interview slowly. Buying a home is highly complex, and you'll need an experienced broker to help you navigate the entire process, from negotiating the best deal to helping you understand the real estate contracts, which, by the way, are legally binding. You'll have a ton of questions. You need someone who is going to be by your side, answering everything for you, keeping you leveled, and most importantly, keeping you protected from lawsuits. When you interview agents, hire slowly. A well-seasoned agent doesn't always mean they're the best option for you, nor does a new agent always mean they won't be able to help you. Agents aren't created equal. It seems everyone knows an agent these days, so take time to interview different agents. Don't just hire the first real estate agent you meet. Find someone you can vibe with, someone who can understand you and your goals. I mean, don't just hire Uncle Bill or Cousin Phil or a colleague that's doing it part-time, and they happen to have the real estate license. That's not the type of agent you want to hire. Hire someone who treats this as a career, who takes it super seriously, who's empathetic, who's practicing actively, because guess what? A 1% mistake on a $500,000 home is $5,000, and mistakes can happen in real estate if the agent is careless and not protecting their client. Speaking of treating this like a career, you want to hire a full-time agent, not a part-time agent who's only in this as a hobby and wants to make a quick buck. Hire a broker who stays abreast of real estate law and practices, learns everything they can about the real estate industry, invest in their education so they can bring all that information back to you, the client, so that you can make the best decisions possible. And most importantly, you're protected. I'm sure there are awesome part-time agents out there somewhere, but it's really difficult to master one's craft if they're not totally committed. And for me, people who aren't committed 100% to their careers and their commission to help someone with such an important and difficult task that is buying or selling a home, they're doing a huge disservice to the people they're representing. Move at your own pace. Renting is okay. Guys, as I peruse social media, I come across posts that say renting is always bad, and that's just not true. Although renting is something I encourage most people to work out of, I'm here to tell you that it's okay to rent. You can use this as a time to prepare to buy by creating a plan, lowering debt, saving money, and researching neighborhoods, and then executing on that plan. Yes, it's true that rates are incredibly low right now, and it is a great time to buy, but don't let the outside world influence you to move faster than what's comfortable for you. Only you know what your personal situation looks like, including your finances. Because guess what? When you buy a home and take out a mortgage, it's you that will be paying that monthly bill, not the outside world. Move at a pace that's most comfortable for you. And if that means renting for now, then that's okay. Let me know if this video helped you out or how I can make it better. I really appreciate the feedback, but buying a home, especially for the first time, can be a super complicated and terrifying experience. But with the right team and the proper preparation, buying a home can be a super memorable and profitable journey.